So let's talk a bit about RSI trading signals and how to use the RSI for trade entries. So when the RSI crosses from below 30 to above the 30 level, it can be seen as a bullish sign where buying pressure is building and a possible trend reversal. If you think about it, if the asset is considered oversold when it's below 30, and then it crosses above 30, it could be seen as, well, the asset's not oversold anymore. It's not in this oversold level, so we could be possibly seeing a possible trend reversal. If prices are falling, the RSI goes down, right? So now if things are crossing to the upside, this could be seen as a bullish sign. Buying pressure is building, selling pressure is decreasing, possible trend reversal. In this situation, this could act as a potential long entry and also as a signal to close any open short positions. We could be seeing a trend reversal. You don't want to have a trend. You don't want to have short positions open if the market is looking to form a bottom, and we might see a possible reversal to the upside. Now, in reverse, and the vice versa, when the RSI falls from above 70 to below the 70 level, it could be seen as a bearish sign that selling pressure is building, possible trend reversal. If you think about it, same concept. If that 70 level is considered an overbought level, right? The asset is in this overbought level. Prices are moving up because when prices move up, the RSI goes up, right? So if the RSI is falling from that overbought level, it could be seen as a trend reversal. Buying pressure is weakening if the RSI is going down. Selling pressure has to be building. That's a bearish sign. And in this situation, we could consider a short entry. We're betting that the price is going to go down, and we also would want to consider closing long positions. You don't want to have any long positions open if you know that the price is going to go down. You're seeing bearish signs. Now, RSI readings can also fall into a range during trends. Now, in an uptrend, prices are forming higher highs, higher lows. The RSI typically will stay above 30 and will often go to 70 or higher, where we can say, all right, well, 30 is our bottom, and we'll often go to 70 or higher and stay in a higher range. Now, in a downtrend, the RSI will typically stay below 70 and will often fall to 30 or lower. We can also consider the midpoint, that 50 level. By default, it's not labeled. Sometimes it is, sometimes it isn't. Some people do like to have an additional line or additional indication at that 50 level, where we could say, all right, well, the RSI could fall to 50, but maybe it'll stay above 50 and it's hanging around 70, or maybe go above that 70 level. That would be normal in an uptrend, right? And worst case scenario, it falls to 30, but as long as it stays above 30, we are still good. If it does fall below that 50, then we want to watch, all right, is it going to fall below 30? That would give further confirmation to a reversal. Same thing in a downtrend. The RSI will typically stay below 70 and often will stay below 50 and hover maybe between 50 and 30 or lower. If we see the RSI reverse to the upside and attempt to break past 50, well, as long as it doesn't go past 70, the downtrend could be considered still valid. And this is something that is really subjective. It really depends on asset to asset. We want to have a variety of technical analysis methods to confirm whether or not we're seeing some sort of trend reversal. We don't want to just focus just on the RSI alone. We want to have a deep understanding of market structure, look for those higher highs, those higher lows, and any reversals or invalidations of those market structures. So here's an example. This is Solana on the 4-hour chart. And here are a couple examples of RSI crosses above or below the 70. Here's the 70, here's the 30. So we'll take a look at these RSI crosses below the 70 line as price falls. So here is Solana, as we see here. Price breaching past the 70 level, entering an overbought condition. At the same time, we see price form these new highs, right? Price came from a low of about maybe 160, neared a high of about maybe 220, maybe 215. The exact price isn't that important. Now, at the same time, we formed this high on the RSI, and we quickly fall back down, right? RSI falls at the same time price is coming down. Price falls to this point, and at the same time, we also see price falling to about the 50 level and then returning back to the 70. So this is something to keep in mind. Well, all right, so price breached past this 70 level, and it fell back down to it, stayed above it, right? That's okay, no worries. It fell back to the 70 level and then actually continued to fall through. And this was given a further confirmation that, hey, there was going to be further downside to this move. So at this particular point, we could have opened up a short. And while it would not have been the most profitable short, it still would have been profitable and valid as long as you're making money, right? So let's say we open up a short at like 210 and we wrote it down to maybe somewhere between 180 190. That's a valid short. That could have been like a 10% short, give or take, about. So, and with leverage, that would have been even more. So that would have been a valid setup right there. Here we see another setup where the RSI crosses above the 70 level and ultimately falls below, right? We're seeing this struggle, especially here and then also here as well. Now, at the same time, if we're actually looking at TradingView, it's a little bit easier. What's interesting here is that the price fell. I mean, RSI fell, but at the same time, there was a slight dip in price, but price continued to move upwards. This is why we want to focus primarily on price. What exactly is price doing? What is the market structure telling us? We're seeing these ascending highs, right? Higher highs, higher lows. Our cause for concern comes from, all right, well, we're failing to produce that higher high. And we do see that eventually happen in the market structure, but based on the indicator, particularly here is when we start to see failure, right? We see this high, price comes down, it comes back up. At the same time, we see a new high in Solana reaching that 260 level. Well, price failed. I mean, the RSI failed to produce another high at this point, right? So we fall below this 70 level. At the same time, we see this significant dip. So this was a valid confirmation of a trend reversal in the downtrend. On the other side of things, here is the RSI crosses above the 30 as price increase. So price is at this extreme low on the RSI. It's an oversold territory. We're somewhere below 20. And this is somewhere around here, right? So price does come back up a little bit. We fall back to here, which would fall around here. Price falls below and then continues upwards. It breaches past this level, and this is where we see a successful long, right? And even longing here would have been successful as well. If you got in at, let's say, $87 and rode it to 100, that's a successful long. That's at least 10%, give or take. So that would have been a successful long. This would have been a successful long, all mainly from looking at these RSI crosses over and under the 30 level, and also over and under the 70 level, and looking for shorts. So more on RSI trading signals. So the middle value, more on this 50 level, if this can be used to determine trend direction, trend reversals, and periods of consolidation in price. And not just price, but also in consolidation in terms of buying volume, buying momentum. Maybe things are settling down for the time being, lower periods of volatility. Now, typically when the RSI crosses above 50, it's a sign of an uptrend, and when it crosses below 50, it's a sign of a downtrend. Now, if the RSI crosses 50 from below, right, we're coming from a lower area, maybe some sort of oversold area, we're crossing above 50, and it's able to stay above the midpoint, it could be a sign for a long entry. Vice versa, if RSI is coming from a higher point, maybe some sort of overbought level, crosses 50 from above, and it's able to stay below it, it could be a sign that it's time for a short entry. Now note, no indicator should be used for trade entries alone, especially RSI midpoint crosses. Setups from extreme areas, the 30 or the 70 crosses, these can be considered more reliable than midpoint crosses, but these 50 crosses or the midpoint crosses can be used to help support a trade idea found from other technical analysis, right? If you're basing some sort of trade idea based on market structure, you're seeing a failure to produce a higher high, or maybe you're seeing ascending lower highs, you're thinking that there's going to be a market reversal to the top. These are situations where you want to look for confluence, meaning that, all right, I'm building my case for the market to go in a direction. I'm building my case for a trade. I'm going to base it off of market structure. I'll look at support and resistance, maybe other things. Now I'm going to also consider, well, the RSI is shifting above this midpoint, or the RSI is shifting from below 30 to above 30. That gives further credence to the trade idea. Here's an example. This is Link, the 2-hour chart on Link, and we're looking for specific examples on specifically for this 50 level, this midpoint level. As you can see, it is labeled here. It's a little bit faded compared to the 30, and the 70, which is fine. This is something you could probably edit in the settings in TradingView or your charting program. We'll take a look here. So RSI breaches past the 50, falls back to the 50. Arguably, this is held, right? We don't see a meaningful bottom to it. Continues upward. Let's say if you bought here, right? We saw this breach. So let's say we go back up. Well, technically, this would have been a successful long, right? You would have entered somewhere around maybe $24, maybe $23-24, and you could have rode that up to at least $1 or $2 more, which would have been somewhere around a 5% move, which is that's a valid move, right? And that's just without any leverage. Here we see indication of the RSI from a near oversold level, lower level, attempting to breach past this 50 level. It does not quite happen, so it is rejected. This could have been a meaningful short, right? This could have been a meaningful short. If we shorted here, let's say from 24 and shorted down to 23, that's a valid short. That could have been a potential move. Here's another indication. We're seeing the RSI fall down to this level, oversold level, just about 30, and then attempting to breach past to this 50 level. It fails to do so. What would I do? I would consider, all right, this is time for a short, right? So I'm seeing price fail to noticeably produce a higher high compared to the highs before. And even here, at this point, this is even before, right? We see the RSI breach past this 50 level. So this is a great example. We could have shorted right here, rode this down to this level, to this 30 level, and that would have been a valid short, even just from here to here. Let's say we took profits, price came back up to this 50, RSI came right back up to this 50 level, failed to breach it. Price also fails to produce a higher high compared to these consecutive highs at the same price point. Buying pressure is weakening at this point, where it's pretty obvious, right? If buying pressure was increasing, we would have seen the higher high, and we also would have seen the RSI breach past this 50. it fails to do so, we could buy at this rejection, or I should say short at this rejection, and we would have been successfully shorting at this point as well. We also see in reverse, if we're looking to long, the RSI comes down to the 50 level from above. We could even view this as a level of support, right? RSI comes down, it bounces up a little bit. Arguably, that could have been a long entry. It would have worked out, not necessarily as clear. In this situation, it would have worked out. I personally don't like to take too much risky moves. And here we do see the RSI trying again to bottom out one more time. This overall could have been potential long entries. Another bottom as well, riding this out from about $26 to a high of about maybe $29. So that's another successful long as well.